So what is up YouTube? In today's video, we're going to be talking about a penny stock that has exploded over the past few days. This company is called Chek and it has the ticker symbol of CHEK. And it is currently trading at $1.73 and has a market cap of close to $80 million. So in today's video, we're going to be talking about what Chek does and their financials and other things as well, and also whether the stock is a buy or not and where I see the stock going. So Chek plans on preventing cancer, and they plan on doing this by detecting polyps with their technology. And polyps can ultimately transform into cancer, so it's better to prevent it than trying to solve it after a patient gets cancer. And they plan on doing this in a non-invasive, patient-friendly, and preparation-friendly way. So it does sound better than current methods to get a regular checkup, but how does Chek plan on doing this? So they have a capsule called C-scan which can be swallowed. And this capsule goes around the gastrointestinal tract, scanning it. And the capsule actually emits a ultra-low dose of X-ray beams. And then there is another component for the C-scan device other than the capsule. So the first component is the capsule, which goes into the patient's body and scans it using ultra low dose of X-ray beams. And so the second component of this device is called the C-scan track. And this is basically 3 small patches which are worn on the patient's back. And this basically records and stores the information found on the C-scan cap. And the last component of this whole technology is called the C-scan view. And this is cloud-based analysis which allows physicians to analyze data anywhere. And this does seem like one of the best and easiest methods out there. But how big is this problem, or how big is this market? So it could take up to 10 years for a polyp to become cancer. So obviously it's better to detect these polyps and stop them from becoming cancer, or else it could be very dangerous to the patient. So colorectal cancer is the 3rd most common cancer in the world, and there are about 1.8 million new cases every single year. And a lot of these cases were preventable if the polyps were detected beforehand. And obviously it's better to try to prevent something from happening like cancer than trying to solve it after someone gets it. And the main reason why we can't detect polyps before is because patients don't want to go through that huge process, and that's where this company comes in. So now let's talk about how C-scan is selling and its reviews. So right now, Chek's product, the C-scan, is yet to actually have any sales. However, the Israeli government did say the product is okay and it is okay to use it. However, they are still yet to set up anything there, and it's probably because they first want to pass the test in US. So obviously before a product like this is used, they have to go to many tests and check whether it actually works or not and whether it's beneficial for the patient, because if it does not work, it could affect the patients in a very bad way. So currently the company is testing in the new US right now, and they've actually gone and tested in New Jersey, and they actually had some positive results. They tested with 40 people and there have been 28 positive results. However, there are a lot more tests to go, and this company will continue to test this product out in the United States during 2021, and it may even extend to 2022. And that's the huge risk you're taking here. You're investing in this company assuming the product is okay to use, and assuming the product works, the company won't have any revenue for the next year or two. So that's a big risk you're taking. You're assuming that the company's product will work and that it will be able to scale. However, if the company's product works, I can almost guarantee it will be able to scale. And I think if it does work, then the company will be worth at least $100 million or even $1 billion. So now let's look at the management team and financials. So the management team and the scientific research team does seem pretty strong. However, there is not much of a track record for many of them. However, the CEO has actually been with this company since 2013. So that's a great sign. Even though the company didn't have any revenue and it was mostly in the research and development stage, he still stayed on it. So now let's talk about their financials. So like I said before, the company is still not making revenue, and that's because they're still in a development stage. However, they've been burning cash at a really fast rate. As in 2019 alone, they burned $14 million, and in quarter 3 of 2020, they burned about $3.84 million. And they've actually been using a lot of cash over the past few years, as they've not been making any money through their operations. And in 2016, they actually used $8 million, and now in 2019, they used about $14 million. So now let's look at their balance sheet. So right now, the company has about $7 million in cash, but they have no debt. So you can see that with the company using close to $10 million per year or even more to use for research and development, they're going to have to raise more cash for next year and future years. And they can do this with 2 things, either shareholder dilution or getting debt. And so I was actually looking at the history of this company, and rather than taking on debt, they actually dilute their shares. So what they do is when they need more cash, they offer new shares onto the market, which basically decreases the amount of stake you have in that company. And this isn't a bad thing, as a lot of growth companies did this in the past and they're continuing to do it, like Tesla and NIO. And usually this is the better option for high growth companies, because right now, yes, there will be shareholder dilution, but in the future, once they start making profits, if they do take on debt, they'll have to use those profits to pay off the debt rather than reinvesting it into their own business. However, if a company continues to do that on a consistent basis, then it might be a bad sign. And in terms of this company, Chek, I really don't see diluting shares as a really bad option. So now let's talk about why the stock popped and whether the stock is a buy or not. The reason the stock popped is they actually got a 180-day extension to stay on the Nasdaq, and the rule was their stock price has to be above $1. And right now we see that the stock is above $1, but they do have to maintain these prices for the next 6 months. And if they do go below the dollar, then they do get delisted and go onto the OTC markets. So now let's talk about whether the stock is a buy or not. So I think this company does have a great product and great technology. However, it is not proven that it works yet. And if it does, then it could easily double or even triple or even go higher. If the product is able to scale and it does work and passes all tests in the United States, I could see this as an easy 5 or 10x. But as this company is burning through tons of cash and its product is still not for sure working, it is a very risky play, and that's why it is a penny stock. And so volatility should be expected, as even one huge order for this stock, it could change the stock price in a massive way. So what I'm doing is I'm buying a few shares, but as a potential pump and dump. I do think with the amount of attention it's getting and with the hype of BNGO, people are trying to find the next BNGO, and they're gonna think this could be the next potential one. So what I think is a lot of money will be put into this stock, and then it might retest its highs. So I'll basically be making a swing trade. And as for long-term investing, if you guys do believe in the company for the long term, do expect volatility and expect the stock to go to zero. Even though it won't, just have that expectation. Don't put all your money into it, as it is very speculative. And like I said before, this stock still has tons of potential, but there is still a high chance it could go to zero. So if you do believe in this company, whatever money you do invest in it, act like you don't have it. And I'm actually very bullish on this industry of genomics, as it could save a lot of lives with the advancements being made in genetic testing, genetic editing, and more. And I think with the innovation happening in this industry, there is tons of potential in it, and that's why I do own the ETF called ARKG. And I will be talking about this ETF and other stocks in this sector and other penny stocks in this sector. But with that being said, I hope you guys did enjoy this analysis. If you guys did, please do leave a like and subscribe. I will try to make more updates on it if there are any major news. And also, thank you for watching.